It's time to wrap up our series on fallen retail angels. The stocks and companies you know and haven't loved, at least not lately. To recap, we started with VF Corp, the maker of North Face and the unfortunate Vans. And I told you that I don't see this one making a comeback anytime soon, although CEO Bracken Darrell recently bought $1 million worth of stock. So not enough to get me off the sidelines, but certainly enough to encourage me. Then I said it was worth buying some Lululemon ahead of next Thursday's earnings report because expectations have simply gotten too low. Next was Nike, where I want to wait for a turn in the business. For now, it's too early to make a move. And while we're on the subject, after speaking to Gap's Richard Dixon last night, I think the selling there is way, way overdone. There's too much good happening at this company, including strong same-store sales from both Gap and Old Navy. Plus, the company's gotten immensely profitable and it's sitting on a ton of cash. With the stock down over 20% today, I think it's worth to go just outright buy the stock on Monday. The sellers will be shamed. Fall into the Gap. Now let's take on the last of the fallen Abercrombie and Fitch and American Eagle Outfitters. Oh, tipped off my hand on that one, didn't I? I want to start off by saying that these are both known as teen retailers, even as Abercrombie's been chasing after its customers as they age, maybe to those as ancient as 40 years old. That's good, because teens are notoriously fickle, which makes them very difficult to bet on. Hence why these two stocks are total sink or swim. Sometimes they're sink and swim. And that's how I feel about A&F right now. Abercrombie has two divisions, the flagship Abercrombie and Hollister, roughly of equal size. Hollister's more cool and laid back, while Abercrombie's more reserved, has a little older clientele than its teen-centered partner. Or to put it bluntly, I could walk into an Abercrombie, not be too embarrassed. Hollister, I'm grandpa trying to buy some jeans for my grandchildren. Hollister had a remarkable quarter, with same-store sales up an incredible 23%. I haven't seen that kind of strength from anyone in the industry. On the other hand, Abercrombie's brand had a 10% decline in same-store sales. I haven't seen that kind of weakness from anybody either. Hollister's got amazing momentum, is on trend with good price points. Abercrombie was off trend. The company was abject about how they missed the mark. Now, we have to put this company in perspective. Abercrombie was a disaster until Fran Horowitz took over as CEO in 2017. She's brought it back from the brink, and we can't ignore that context when we're thinking about one bad quarter from a half the business. My colleague Sarah Eisen knows this company cold. She told me that Horowitz has pulled off a total reset and brand transformation, especially at the division that faltered. Abercrombie, it had been toxic. She's gotten the classic playbook, including a great online presence and good Insta marketing. But it's still teen retail, so it can be up and down. As Horowitz told her, and I quote, "When we align product, voice, and experience, our customer spends, as evidenced by the strong results we deliver for Hollister," end quote. Obviously, though, we have the opposite occurring at Abercrombie. Now, but that's the way it is in teen retail. To me, it's also the opportunity here. Right now, Abercrombie's clearing out the wrong inventory, bringing in fresh product, and given Horowitz's tremendous track record, possibility of a big turn, I'm calling it huge. Buy. We know she believes in the most recent quarter. She had the company repurchase $200 million worth of stock, 5% of the total outstanding shares. Strong commitment. Now, Abercrombie's a small company, market cap of just $3.7 billion, and a huge short position, standing at 13.8%. If you think that Hollister can stay hot for another quarter and the Abercrombie brand can turn, this one could be explosive. Plus, unlike so many other retailers, Abercrombie really got ahead of the tariff issue. Listen to this from CFO Robert Ball. Quote, "For China specifically, we've worked for some time now to relocate resources of supply, and this year's sourcing volume from China will be in the low single digits," end quote. They source from 16 countries. Nice diversification. And then here's the real opportunity. Write this down. Next Tuesday, Matt Boss from J.P. Morgan on our network today. He's the best retail analyst in the business. He has a buy on the stock. He's hosting A&F's chief financial officer, the aforementioned Robert Ball, and the chief operating officer, which is Scott Lupesky, in New York City. Further, Boss is hosting Horowitz herself on June 10 in Toronto. If there's any improvement at all in flagship Abercrombie, this stock could go bonkers. As people remember a year ago when this $78 stock stood at $178. As Horowitz said on the call, quote, "Abercrombie has a history of capitalizing on moments like these to further strengthen the business," end quote. I believe her. Got my blessing to buy the stock on Monday. Especially if President Trump keeps trashing China over the weekend and people dump the stock, even though Abercrombie's made itself pretty China-proof. Next up, American Eagle. I should say next down, American Eagle, because this one had a miserable quarter. Sales down 5% year over year. Same-store sales down 3%. Gross margin off a staggering 1,100 basis points. I don't even know how you do that. This next quarter looks no better. They're guiding for a 5% revenue shrinkage again. Now, American Eagle is beset with problems. The company's abject, too. CEO Jay Schottenstein started his conference call by saying the results were disappointing. $75 million inventory write-off, which contributed to a $68 million operating loss. They had product misses, too. Too much inventory and were highly promotional to get the stuff off the floor. Strangely, even though the business is awful, American Eagle initiated a $200 million accelerated share buyback and separately bought $31 million of stock in the open market. If I were them, I'd be a little more chary with these repurchases. Company doesn't have all that much money in the bank, $88 million in cash at the end of April. If you're a retailer, you need to have some more flexibility. Look, if you're wrong, I think you're flushing $200 million worth of flexibility down the drain here. This is not my first rodeo with American Eagle. My charitable trust took a very big hit in the stock a few years ago when they held on. We held on way too long because they promised one good quarter after another, and they could not deliver. It was a nightmare. I am not inclined to give them the benefit of the doubt again. Fool me once, shame on you. Fool me twice, shame on me. I don't usually recommend options here, but I can tell you the teams are so fickle that if I were to buy Abercrombie ahead of the talk on JP Morgan on Tuesday, I actually might even do it with deep in the money calls, and I never mention or recommend calls. Bottom line, I want you to limit your downside with these team retailers. You never know when a company like this may go from sink and swim to just plain sink, at least for the next quarter. But to me, Abercrombie, I think that's worth buying perhaps as soon as next week. Let's speak to Jackson in North Carolina. Jackson.
Booyah, Jim. Hope you're having a fantastic day.
You know what? This has been a great day. I've spent the day working 100% since 4 a.m. That's my kind of day. I don't know about you, but that's mine. What else? What's going on?
Not that early for me, but was curious if you had any opinion on Ross stores.
Yes, I do. My opinion is sell Ross stores and buy TJX. That's my opinion. And you know why I have that opinion? Because I'm right. Let's go to Tina in Florida. Tina.
Hey, Jim.
Yeah.
Thank you, and congratulations on 20 years.
Hey, wow, thank you. Thank you.
Thanks to you and your help, my husband and I are enjoying a nice retirement in Florida. So
yes,
we really appreciate that.
Yes, what people don't understand, it's not. This is. I don't know. I do not know Tina that well from Florida. I just met her. I don't know, about 38 seconds ago. But thank you so much for saying that. How can I help you now?
Well, you don't know me, but we know you over 20 years. We appreciate everything you do.
Thank you very much.
You're welcome. Thank you. There are a couple stocks in our portfolio that we really like. They've done well for us. You recommended them. And now we'd like to invest more money, and we'd like to choose one over the other. Which would you choose, Starbucks or Dutch Brothers?
Oh, my God, Brian Nickel be so mad at me. Oh, my God, but I've got to tell you, at this very moment, Christine Barone has got the mojo. She has got the mojo. And I think that the Dutch Bros, I think I happen to like them from the times my daughter lived in Oregon. Dutch Bros got 100 written all over it. And thank you for the kind words, Tina. All right, look, I don't feel perfectly confident about the stock of Abercrombie or American Eagle here, but you do have my blessing to buy some Abercrombie, and you do not have my blessing to buy any American Eagle. All right, much more Mad Money ahead, including my exclusive with cybersecurity player Zscaler. How can I help you? We've been hearing about companies having a soft April, but I don't think that's really happening this way. Have you seen that chart? Then we keep hearing that the spend on AI has peaked, but I don't think we're anywhere near it. And I'm going to tell you why. And, of course, all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.